Good morning, students. Yet again, we will be doing this profit and loss account now. What is the meaning of profit and loss account? Profit and loss account is an account which is prepared to calculate the net profit or net loss of a business concern for a given accounting period. You see, from the gross profit, when we subtract all the indirect expenses and add some direct indirect incomes, then it is called, then we will get net profit. If we see that profit and loss account is maintained in a ledger format, and in the ledger format the debit side we record all the indirect expenses, and the credit side we will record all the indirect incomes like rent, commission, discount received, interest received, rent received, commission received. And the difference, that is gross profit minus indirect expense plus indirect incomes, is net profit. Let's see the format. This is the format. Because of so many items in the debit side, I have made it little bigger like this to fit it in one place. It is two rent, two rates and taxes, two salaries, two printing and stationery, two office lightning, postage and telegram, telephone charges, legal charges, audit fees, in general insurance, insurance expenses, general expenses, repairs and renewals, license fee, upkeep of cars, etc., loss by fire and theft, depreciation on assets. These are all coming under office and administrative expense. Then we have the selling and distribution expenses. All the selling expenses are indirect expenses like advertisement, carriage outward, that is the selling expense, go down rent, sundry expenses, trade expenses, traveling expenses, brokerage, export duty, packing charges, entertainment expenses, agents commission, storage charges, salesman salaries, commission, bad debts, provision for bad and doubtful debts, storage for finished goods. Okay, dear. Then these financial expenses. These financial expenses are interest on loan, interest on overdraft, bank charges, bills discounting, interest on debentures, loss in exchange, discounting allowed, interest on capital. All these are nothing but my indirect expenses, as well as extraordinary expenses like abnormal losses, goods lost in transit, loss by fire, loss on sale of asset, cash defalcations. All these are debit expenses. Now we have the indirect incomes, that is discount received, rent received, commission received, interest received. Beside that, you remember we have to bring the gross profit from the trading account. If there is a gross loss, we will bring it in the debit side, to gross loss. And the balancing figure, again, we will make the balancing figure over here even. So the balancing figure is the credit total and the debit total we will be making, and we get a balancing figure. If the credit total is more, we will have a net profit that will be written to capital account, net profit carried down. If the debit total is more, then we will have a net loss. Then we will be writing by capital account, net loss carried down. This will be taken to the balance sheet. Now let's understand, students, about a sum. Let's understand this whole thing by doing a sum. So this is the sum, profit and loss account. Office expenses 5,000, administrative expense 2,000, selling expense 1,000, distribution expense 1,000, financial expenses 3,000, extraordinary expenses 4,000, abnormal losses 2,000, revenue income, that is rent received, 300, non-operating income 500, and abnormal gains is given 600, and there's a gross loss of 12,500. Let's do this sum. So when we are doing this sum, see, there's a gross profit. One sec. There is a gross profit 12,500. Gross profit 12,500. So we will be bringing that one first. By gross profit brought down 12,500. Then there was a rent received of rupees 300. Then there was a non-operating income 500. Abnormal gain of 600 was there. Abnormal gain 600. Then we have capital account. Capital account is the balancing figure that we will be getting after writing all the expenses. The expenses which are given over here are office expense, administrative expense. Then we have selling expense. Then distribution expense. All the expenses we have written over here. Selling expenses 1000, distribution expenses 1000, and financial charges or expenses 3000, that also is written. Then extraordinary expenses 4000, that is also given. Abnormal losses has to be written, abnormal loss like goods lost in fire, something like that, 2000. And royalty on production, this will not come. Royalty on production is not there, only it will not come. So when we have done this all, we got the total as 18,000. This will not be there, so it will be, the total is 18,000. And when we have done this total, it is coming 4,700 less. So 4,700 is nothing but our net loss. So there is a net loss because our expenses are more than the revenue. So it's a net loss of 4,700. Okay. So hope you have understand all the indirect expenses we have written in the expenses side, all the indirect incomes we have written. Now, what the meaning of indirect incomes? Indirect incomes are those incomes which are not operating income, non-operating incomes. That is, apart from sales, whatever incomes organization gets, that is indirect income. And administrative expenses, again, office and administrative expense, selling and distribution expense, financial charges and extraordinary expenses or abnormal expenses or losses are all our indirect expenses, not direct expenses, because direct expenses only includes purchase or manufacturing expenses. Those are in the trading account. And these all indirect expenses we have recorded, and the balancing figure we got is your net loss in this case. You can have net profit even. Now, this is the sum, students. This you will be doing, this sum, and you will be sending me through email or through comment section or through WhatsApp. Thank you, students. Please do the needful and send it to me, the work. Thank you, students. And after this, we will have the end of profit and loss. So end of profit and loss, we have end of profit and loss. And now we will be doing nothing but balance it. We will be doing balance it now after this. Only balance it is left and then a complete sum. Okay. Thank you, students.